Sudden interest in Pandora stock has been sparking up in the options world. Talking to us now is trader Andrew Keene. He's president of KeeneOnTheMarket.com. And Andrew, this stock has been stuck in a range, and all of a sudden there's so much call buying going. Is this an indication that stock could break out?
Oh, it's sometimes an indication. I've been reading what is, quote, paper, which is just an order from a mutual fund, hedge fund, or retail broker for a very, very long time. I've seen the same call activity you've been seeing coming into earnings. The at-the-money straddle, so the calls and puts, is $2, which is implying a 20% move from now until September. The stock is $10 right now. All these social media stocks have gotten slammed on earnings. Groupon got slammed. Facebook got slammed. You know, is Pandora social media? Kind of yes, kind of no. Their price per sales is around 5. Facebook's is around 9. Their forward PE is really, really high. I would be a seller of the stock. We have all the moving averages higher. We have the 200-day around 1080. We have the 100-day, 150-day around this $10 level. So I would look into be a seller of this on any rally.
Well, you know, you mentioned that 20%. We should note that 20% move could be either up or down, so it's tough to tell so far. But do you think that long term this would be maybe something somebody might want to own at some point?
I mean, I only think their only chance of going higher, in my point of view, is an acquisition. They are only about $2 billion in market cap. I think around 1.8. So maybe if, you know, Amazon or Apple wanted to, you know, expand their horizons, to diversify their portfolio to a radio market or to a music market, it might be interesting. But with so many free downloadable websites with music, it's not something that I really want to put in for a long-term portfolio.
Makes a lot of sense, Andrew. And what about Tiffany? Earnings are coming out today. Is this a long-term hold? It used to be. Back in May, the stock was trading around $70 or so. Now it's closer to $58. Is this a bargain price here?
I don't think so. You know, I think that I always say that I want to get short, weak stocks on rallies, and I want to buy strong stocks on dips. I always try to get long the same ones everybody knows when I talk about it on the show. Apple, GLD, Whole Foods is another one. Hanes Celestial is another one. If these things dip at all, I'd look to be a buyer. However, with Tiffany's, it's in the same bracket as Coach, Lululemon, CMG, Wynn. These are high growth stocks, high beta, high PE, high growth, right? That means I have to pay for that growth. And then we're in a kind of market where people are going more towards value, more towards technology, consumer staples, than they are wanting to invest in the growth sector. So on a long-term perspective, I'm not putting Tiffany's in my book.
That's Andrew Keene, president of KeeneOnTheMarket.com.